We're seeing another positive year in the stock market in 2014, although it's been a little more jittery than what we've seen in the last couple of years. This year, as well as the last few years, the U.S. market has been the best stock market in the world. Developed Europe is really suffering right now from an economic standpoint. That has scared investors away. We have come out of the recession of 2008, and while the United States isn't growing as fast as we would all like it to, it is growing, and particularly in the stock market. Profits in corporate America are as strong as they've ever been. Companies in the United States have cleaner balance sheets really than they ever have before. There's a lot of firepower really kind of waiting on the sidelines, and I think that's one thing that has made U.S. companies very attractive to investors. And we've started to see companies deploy some of that excess cash in the form of share buybacks. And really what that means is companies are taking cash in their balance sheet and they're going out and they're buying back their own stock. And what that signals to investors is if the owner of a company feels like their own stock is undervalued, then hey, maybe the stock is undervalued. And that really encourages investors to jump in. Our expectation is the stock market is probably going to finish the year somewhere with a high single-digit return, somewhere around 8 to 10%. We're pretty close to that right now, so I think the back half of the year is probably going to be a little choppy, a little bit more volatility than what we've seen. The markets are really focused right now on a number of geopolitical events that are happening, from the Russia-Ukraine situation to the turmoil in Iraq and what's going on with countries in Latin America such as Argentina. Everybody is affected in one way, shape, or form. And more often than not, for us here in the United States, it's because of our trading partners. And what's happening around the world with our trading partners directly impacts us. If demand is lower in other parts of the world, that just means that we have fewer goods to produce. There is tremendous growth in emerging markets, and it creates opportunities for business owners in the Midwest to try to tap into those new markets. That's the nice thing about this economy that is so technology-based, is that we have the ability to sell to people that we wouldn't have even thought we could talk to, let alone sell to, 10 years ago. I think interest rates are going to remain low for a lot of the reasons that we've talked about before: the geopolitical uncertainty, the fact that global interest rates are incredibly low. There isn't going to be a big catalyst to spark a rise in rates. The Fed will probably begin raising their target interest rate in the middle half of next year. And that's certainly if the economy continues to improve, which we expect it will. As far as sectors that we're watching, we're bullish on technology, healthcare, energy, and industrials. I've read studies that anticipate there's going to be about $1 trillion of new infrastructure investment in the energy sector here in the United States. This goes hand in hand with technology and fracking and some of these other new processes and techniques that we've seen in the energy industry. Is going to result in probably less than 2.5 years, the United States will be the largest producer of energy in the world, over Saudi Arabia and Russia. All of those sectors benefit the industrial, the pure industrial sector. We're finally starting to see cranes on the skyline again, which is a great thing. That's going to impact construction, that's going to impact manufacturing firms, and that's going to have a direct benefit to a lot of the companies in the Chicago area. What's really the most exciting thing about the economy as it is today and technology is the fact that people are really having the opportunity to pursue their passions, being able to do what they do best and do what they love and be able to make a career of it. That's really what excites me right now.